Good morning.
Robert and I were just kind of talking about so many variables that are out there for farmers nowadays, and it's just crazy. It's just crazy. There's one of the points that I made this morning before the markets opened was,
I didn't hear that last part.
huh?
I didn't hear what you said that last part.
I said Robert and I were just talking about all of the variables that farmers face, and that are just beyond their control. I don't know that I can be able to do that. One of the reasons why I love trading so much is that yes, there's a lot of variables that are going into that go into. And this is why I wanted to talk today. There's just so many variables that go into our trading, so many different things, so many different issues affecting the global macro view that are going to move markets on a consistent basis. But I love trading so much because I can control what I do. I can control my risk. I can control my exposure, and then I can control my how I take profit in any trade that I put on. It just it simplifies everything. It keeps my life.
You cannot scratch corn that you planted, but you can scratch your futures trade.
Right, Robert. That's right. That's a great way of putting it.
Okay, so you got any areas you want to go to?
Well, Robert, I think had a great question, and I think it's something that we can start off on. That I sent it to you. That we that picks up on your blog post last night.
Okay.
Ira, I can repeat it. So, it was very insightful what you wrote, and I just cannot put all the dots together yet. If the new Fed person, if a new Fed person is elected and enacts the yield curve control, how is it going to impact commodities, do you think? Specifically grains I had, but now I'm just thinking now more macro. What about all commodities? What do you think the impact would be? And would it be immediate?
No, hold on one second. Well, for all commodities, and we can put up the, I've been watching the Bloomberg Commodity Index, whether that's the best or not. It's not, but there is no best as far as I'm concerned. But if the dollar were to come under pressure due to a change in the Fed, which is easy to do by the way, and I'll tell you what, and I'm not a contrarian. Anybody who knows me, it's not the way I approach life. It's not the way I trade. But I do talk to a lot of people. I get a lot of feedback from my blog, and I would say 95% of people have written off trading currencies. Now, I have to say that's been a very intelligent decision. Currency trading, on a daily basis, there's some really good trades. But for those who are looking for a longer term statement, trade, well, I actually, if you've had to hedge stuff like you understand, Robert, the move up to 121 in the euro, which I have to say, well, let me just pull up what was the exact high. Well, we got up to, in this last 24-month period anyway, we got up to 123.50 back in January of this year. But we weren't going to really be excited until we got over that 125.50. I was very adamant about that then. But it hasn't been a bad range for the year. So, if you've been trying to be long, I'm using the euro here. Then it's been a miserable year. If you've been trying to be short, it's only paid rewards really, I think, in the last 4 months. And it's still been a difficult trade. So people, when they look at it, I can put my money to use far better else far better other places. And I think that's right. But I look, part of the way I do my analysis, I look for divergences that start to occur and to see when markets start to shift. Are we there? Not a chance in the world. We're still so range bound. So those who are writing it off going, okay, I'm not gonna, but I have various ways to play it. And the gold currency play last week was really a good play for me. Right now I'm out of, I actually was playing with it overnight and made some money, but I'm backing off here a little bit. The euro strength is very surprising to me. Well, but that could be too because the Swiss National Bank is in. And why do I say that? Because in the way that I monitor these markets, the Swiss franc is down and has been weak all day. Well, since your unemployment number, but that euro Swiss has corrected quite a bit. And that's been a very important spread from across. I have to be careful the way I phrase my.
So Ira, I
Yeah.
just want to make sure I understand the implications of a YCC. So if we have a yield curve control, we would, I presume, squash the interest rates, and that would cause the dollar to go down versus euro, right? Or am I confusing the concept?
No. If the United States were to go to a full-blown yield curve control because they were worried about the price of Treasury borrowing rising, and the Fed was going to squish this, which was historical precedent for, by the way. Now, a lot of people said, well, why would they go there? We just saw what the Aussies did, right? The Aussies got blown up by this as they were trying to control the yield curve from 3 years down.
Yes.
At 10 basis points. Well, that curve went to 80 basis points. So they had evidently failed and they pulled the plug on it. And then you got the radical move across the whole curve in Australia. And people say, well, that'll happen in the United States. Different situation. The United States is the world's reserve currency. And as long as people demand it, for debt repayment and global transactions, there's demand for it, and they can get away with it for far longer. I mean, the Aussies did a pretty good job of getting away with it, but the Japanese have also been using it, but we don't really know what the Japanese are doing, by the way. The numbers just are difficult to monitor because the BOJ is not very transparent. And there's really not much bond market left there to trade. So it's much more difficult. But your question is right. So in order to do it, it would be the market, I believe, would get the sense that the United States is now at full stream money printing by the Fed, because that's really what they have to do. Now, yeah, if they do yield curve control, they could stop buying on the short end, right? And just move all the purchases out to longer duration. And the Treasury can help them by issuing more in longer durations. So there are certain things to play out here, but then we would see the curve flatten fairly dramatically, right? Because
yes, you would have a
and not protecting the short end, which has been kind of my view. And when I read the numbers from some of the major hedge funds and trading groups in October, because they all got caught wrong. They got caught with steepeners on, it appears, and highly leveraged, which we always know that's why we get these really cataclysmic moves at times, because the leverage is so vast. So when they're unwinding it, and we did see that. But I have to say that we in this room and on the blog for months and months have talked about flatteners and why flatteners.
Yes, we have.
So, I wish one of these or two of these groups would hire me. I would actually just just to get the conversation going. Because when you suffer from the fact that they become very myopic and the conversation is one-sided. And I find one-sided conversation to be odious.
Borrowing the language from the European Fed.
Yes, borrowing from which I got a few very heated that I misunderstood what she had to say. I didn't misunderstand what she had to say, by the way.
Well, that was actually very rude of her. She is usually polite, but saying something is revolting, that was unlike her.
Yeah, I had one major journalist who read the blog and emailed me that I misinterpreted. I didn't know, and that I'd have to look to Shakespeare, and the use of the word odious, from the Brits doesn't mean. First of all, she's not British, and when I went back and listened to it again, because you could do that with the great work of YouTube, and in context, I absolutely understood. Like, how dare you think that we're going to move because others are moving? Now, I will say this, and excuse me, I'm having my breakfast at the same time. I will say this. If the G7, and as much as I find them a group not to my liking, because I believe that they're a remnant from days past, but if they were to have a purpose here, they should get their asses together like the G7 finance ministers do, and come with the central bankers, by the way, that's how they meet. And then after they meet, the leaders, the prime ministers, presidents, dictators, whatever we want to call them, come together and really push the policy. But what the G7 needs to do to prevent and contain, like Lagarde, is to come together and agree to all NQE at the same time. Then we can really let the chips fall where they are.
Well, that'd be capitalism.
Well, I mean, it'd be almost like somewhat of a, some people would say it's a Bretton Woods. I'd say it's probably a combination of a Plaza Accord and a Bretton Woods type of deal. But the outcome would, as you say, Matt, then we would get a real market response to whatever is going on. There's no market response. I mean, it is ludicrous to think, because you can see, and just like here, as I was having the discussion about the Swiss franc, right? Because I'm looking at the Euro Swiss, and the Euro Swiss, I can tell from the action that the Swiss National Bank is in buying euros today and selling Swiss francs, because that you can you put the cash cross up?
I don't have it, no.
Okay. And I don't think I can do it for you. I don't have that. But I'm telling you, you'll have to trust me when I tell you this, because it is accurate. I'm sitting in front of my 210 variables. I just gave somebody a tutorial on Friday afternoon. Very smart guy, by the way, who wants to learn and keeps learning. But we've made, we're right now at 105.93 on this cross, okay? The low this month was 105.33, and it's been the low of the last, since May of 2020. You know what? It is really interesting how important March, April, and May of 2020 is, and everybody should mark their calendars and always go back to that to look to see where we are from there, right? But we are back down to that area of lows. Now, I say that's important because the whole policy of the Swiss National Bank, with its buying all these foreign assets, is to prevent an appreciation of the Swiss against the euro. That's where it starts, and then it spills over everywhere else. But that's what their goal is. Well, you know, the fact that we're down, again, we're testing, well, the lows made in May of 2020, which brings us back all the way to the most important time frame of the first quarter of 2015. And I'm not going to take you through a history lesson there, but so they are failing in their endeavor to keep the Swiss weaker than they would like. So that's like, and I use that as an example of how broken the markets are. Because the central banks will not, the major central banks will not allow them to work. Everybody follow that, because it's really important to understand that.
At this point, Ira, can they even allow the markets to work? You know, we're so deep into it, starting all the way back to 08 with 09 with Santelli's famous rant when he was, and maybe I'm off base, but isn't that what Rick was, you know, that famous rant that ended up, you know, having an octopus effect with the tentacles that spread across the Tea Party and whatnot, unintended effect. But, you know, his rant against, you know, just letting the markets straighten things out.
Well,
so now are we so deep into quantitative easing, stimulus, central bank manipulation that it's.
Well, Rick wasn't ranting about the manipulation at that time. Rick was ranting that he was taking what I would call a Calvinistic approach, and I dare say a famous, you know, the way the Germans would look at it and go, look at, you borrowed money, you borrowed too much money, you leveraged yourself up, you borrowed more, and then he was opposed to bailing them out.
Right.
Right. So he was, because at that time markets were still working. In fact, they were working pretty well, right?
Yeah, they were. But isn't that the beginning of them of the central banks not allowing the markets to work?
Well, it certainly begins there, but that was only 600 billion, if I remember correctly, right?
Yeah, yeah, or 800, 600, 800, whatever it was.
And they were going to stop, which they did. In fact,
so I guess my point in going all the way back that far is just now what? Now what?
Yeah, it's a good question. Well, we don't know what, right? Because they're in so deep, which is why we get all this rhetoric. Because it's, you know, and that's my point about nobody wants to really be the first one to go. Nobody wants to be the first one to go.
Because their currency will go stronger. So
Yes.
they have a potential most risk.
Right, which
To impact the economy, right?
which is what really threw me on Friday's action. Right? We had the Fed announce beginning quote unquote tapering. We certainly had good jobs numbers. The dollar in the first 2 hours was rallying. The gold had certainly lifted off the bottom as the silver did, but that didn't surprise me because that's why I wrote it. That's the previous Sunday night about watching the gold euro and gold currencies, because I think that in going back to Lagarde's comment about odious, central banks have put themselves in a very, very tenuous situation. That's my view. And that's why I've always thought that gold was a good investment, because it's the credibility of banks, of the central banks that's at stake. And when that's at stake, especially in a zero or negative interest rate nominal, I'm not even talking about real interest. Real interest rates are so far negative, which is, I really believe, a big part of the sustaining of the equity rally. But that was critical to it. And when I saw the euro rally as hard as it did late in the day, and all the currencies went from, being down, the dollar was 0.5% higher, and then all of a sudden turned. With the metal rally increasing, the bonds, I mean, I had to start thinking, what could be driving this? This is antithetical. It's amazing, because the press will put out crap, and then when it flies in their face, you don't see a thing.
No, yeah, you're right. Absolutely. They just shut down.
You do not see a thing. So that was one of those, so I started thinking, I go, and then there was the Twitter world, of course, was filled of statements, well, Powell was at the White House previous day, Brainerd was at the White House. So I go, are we going to see something about an announcement? And is Powell, I mean, that's all I could think about. I kept going back and forth and back and forth.
To Mike Temple's, and I this morning I pulled up the blog again to see if you responded to Temple's comment.
Yeah.
To I guess I've had the same thought about Bitcoin being the new hedge against the central banks losing control of monetary policy, as opposed to taking prominence over gold. But if you look at it, just looking at even an hourly, going to a daily, going back to the daily on Friday, we had a big rally in gold, we had the big rally in bonds, and I think the key. Well, here's the second part of that thought, is the key being the rally and the strength in the euro too. Gives you pause or gives you something to look at, think about. Now we look at the gold. I mean, that rally in gold was just out of nowhere. It was strong, and the bonds too. I caught part of the gold, and then we had a couple of traders. Mark Wisniewski caught the bond rally all the way up from the opening range and just sold them up to 63.15, 163.15. Anyway, Bitcoin didn't do anything Friday. Rallying today, Friday sat.
Well, I think a lot of that has to do, and a guy who I love to read, Eric Peters, picked it up, and I saw it yesterday morning. I almost bought Bitcoin last night because I just didn't pull the trigger. But here's what, let's see if I have Eric. Hold on one second. I know I have it. But Eric Peters is very, very, in his weekend notes, and he writes, he has his firm called One River Asset Management, okay? And he talks about, and he says this, and this is not like him. He goes through the markets, and then he tells you, and he says this, standing ovation. The President's Working Group guidance on the future of stablecoin was published. It was a philosophical leap that makes the end game crystal clear. A pathway led by US policy that invites private innovation into the existing financial regulatory architecture.
Can you send that to me?
Huh?
Would you send that to me, please?
I will. Yeah, Eric will. He's a blog reader, and we share a lot of things. I actually got introduced to him by Gary Kaminsky. But we've had some very good conversations, Eric and I. I have a lot of respect for him. His son is a sophomore at Annapolis And I think his daughter is going to West Point.
Wow.
Yeah, he's a very interesting guy. Very, very interesting guy. Last year, his kids, they live in rural Connecticut. And his kids, oh, his son's playing lacrosse at Navy. So he's pretty Navy, very good lacrosse school. I don't know, they're all athletes, but more than that. So last year, probably in about April and May of COVID, they put out through his letter that they wanted to raise funds for local kids who they were going to school with and families who were really in need. So I sent them a check and they were so appreciative. And then I said to them, this year, I think they raised $66,000 in their local, and dispersed and kept the funds. So when people had needs, food, whatever, sure, couldn't do this because they were, so I said, well, you're going to raise more this year? They said, no, we have more than enough. We've accomplished what his daughter wrote me a letter, but very, very high. But he, and I didn't know this, because I really don't talk much to people about what they do. It's like same with Bookfire. I can't tell you, we talk about trading, but I have no idea what he manages, who he manages. But Eric had written a piece that made it out somewhere that he was acting as a liaison for crypto for Tudor and others. So when he writes about crypto, I pay attention.
Yeah.
You got I just sent it to you, so you have it.
Thank you.
Now, I also went back, as long as we're on this subject, and pulled down two speeches given by Lael Brainerd, Fed Governor Lael Brainerd. One from December 18, 2019. Update on digital currency, stable coins, and the challenges ahead. These you can all find on the Fed website. December 18th. And then one given May 24th, 2021. Entitled Private Money and the Central Bank Money as Payments Go Digital, an update on CBDCs. So I haven't gone back to reread them. I read them. I'm looking for the one where she talks about what should be the anchor of stable coins.
All right. That goes back to a question I asked you a long time ago. And Judd accused me of being a gold bug and a conspiracy nut. What will be the anchor of stablecoin? Will it be an asset-backed, version of it, or will it just be the good faith and credit of the United States government? Or,
well,
is it the dollar, and will it be treasury? Who knows?
Yet to be decided, right? But some voices may have more influence than others. That's all. That's the only way I could put it. So some voices may have more authority than others.
Hey, Ira, this is Mark. How you doing?
Good. How are you, Mark?
Good. I read your blog post last night. It was good. I had a two-part question, and I think it was mainly to do around inflation. I guess I'll read the second part first. It was about Brainerd, and you had mentioned that they weren't going to tighten, or there was in your blog post about until all the economic sectors recover, right? So define recovery how you want, right? So clearly supply chains have been talked to not alleviating the bottlenecks until end of 22, sometime in 2023. With that, will the quote unquote transitory goalpost continue to be moved at the expense of the taxpayer in exchange for the trillions in infrastructure spending? So I guess to recap that is,
where are you reading it? Whose quote is that?
oh, when I did quote unquote transitory, I just put that in air quotes.
Oh.
I had said that was transitory. So
Excellent,
meaning,
excellent. So I applaud that. That's really good. So, okay, so I'm sorry for.
so we have all this spending going on, but we also have the fact of the matter is that you're going to have this infrastructure spending, but are the U.S. taxpayer going to have to foot this bill, to foot this bill for the betterment of society through infrastructure is where I'm getting, and allow this inflation to really take hold and not really allow it to be transitory. Like, I guess that's my point. You know, they're going to move this goalpost and move it, but they're just going to keep on spending more if they're allowed.
Well, okay, so you ask a very good question. Now, if you listen to the rhetoric, and it's like when Biden was in Glasgow, and same for the other White House people, they all talked about, well, we have 14 Nobel laureates in economics who support this, and talking about the spending on the green infrastructure. So, if I was in the media, I would stand up and say, "Can you name one of the people that you're throwing about?" That would be, but that's why we get invited, because I can show you 100 on the other side who will disagree, right? And that's the wonderful thing about social science, the social sciences. You can find people on every edge of the argument. And believe me, I'm highly trained and educated from very good people in the social sciences. So I've had to deal with this from an academic perspective, and then just as an observer. So we can always find it. So transitory, I know how they define it. And that's what, and as you talk about the goal, they'll move the goalpost when it fits them. But interestingly, when I have my notes from the Powell press conference, he goes all over the place. And then when he wants to really provide the rationale for their dovishness, then he goes, and it was 0.5. Yes, it was 0.4 and 5, which he talked about the 4.8% unemployment rate. And he said that and this is critical, because we're no longer focusing on non-farm payrolls. We're no longer focusing on average hourly earnings. The focus is, of course, moved to worker participation, because it remains weak, and they're perplexed as to why it's weak, right? Which gives them reason for keeping rates low, because we don't understand it. We believe it'll improve, but we don't understand it. And then at the press conference, you can go listen, and then he says, that we need to be we need to have more humility because our forecasting is so weak. And to me, that boggles my mind, because you've made a massive bet and continually lever up that bet, even though you're calling into the fact that you need to be more humble. But if you need to be more humble, why are you making such a great bet when you're not sure of outcomes? So now you could say, well, if we don't, the whole economy would implode. And that goes back to Matt, that goes back to Santelli's.
It does. I see that.
So, counterfactuals are a great technique for a high school debating team. And it works, but that's not what we're talking about. You know what? As Santelli and I used to talk about all the time, the first rule of being in a hole is stop digging. But as we see, they don't know how to stop digging. They keep digging and digging and because they're so afraid of disappointing markets, I guess, because I will get you 100 top economists, and I'm beginning with Larry Summers, and I very rarely agree with Larry Summers. I have a lot of respect for him. He's a very bright guy, but there are many things he's done in the public policy realm I've disagreed with. But, you know, Larry Summers, prior to the Fed's meeting, warned them that they were caving into wokeism and taking on responsibilities that were going to be a problem for them. And that's why, and I said, well, I agree, certainly agree with that, because I have faulted Powell for being the Minister of Social Justice. And here was one of those moments. Because then after he makes the point about the lower participation rate, he immediately, on point 5 of these are his comments before he took questions. He said the lowest rung of the economy is suffering the most. So he went and he mentions Black and Hispanics suffering most. They have not recovered. And he did not use his usual phrase, which was through no fault of their own. But he put this on, you know, maybe this has something to do with participation rate, you know, and then we went to childcare. You know, he covered a lot of ground there. So, Mark, I'm trying to, they will keep moving this. I have no idea. But they're stuck now. Same as the European Central Bank. Lagarde is terrified, and she said it back in July, and I was amazed by her honesty, which was, you know, when questioned at her press conference in July after the ECB meeting, she said, look, we're going to be slow to remove the QE and to raise rates because the amount of borrowing that has been done by firms and households may well render, those are my words, not hers, I'm paraphrasing, may well render the financial system, may undermine the fragility of the financial system. I thought it was an amazingly forthright comment because she was telling you why. But you know, there's a famous, in Yiddish, there's a famous definition of chutzpah, right? And to me, that was chutzpah, is what Powell, this is chutzpah, nerve. And it goes like this. A 17-year-old male child kills his parents. And when he goes before the judge, he throws himself on the mercy of the court because he's an orphan. That to me is the central banks are locked into. They keep proclaiming this, and this because they've locked themselves into a bad situation. And as we go back to that, the first one out the door, well, they don't want to suffer those repercussions because, again, if the U.S. goes alone and the dollar will rally. If the dollar rallies, then you're going to get what Matt alluded to with Santelli. A dollar rally will bring the global financial and economic system to its knees. And I go back to Gillian Tett's article, but she was only picking up from what I've blogged about for a long time for the International Institute of Finance, who in their work show global debt at 296 trillion. Now, it's not all dollars, but there's a lot of dollar finance, especially with the US interest rates so low. It's one of the things that the Fed doesn't want to publicly own up to, but if you listen to like Richard Clarida and a few others, they know that their policies, again, the money has leached out all over the friggin' world. And it has funded a lot of borrowing. And if the dollar, my numbers, to me, if the dollar rallied 10%, that's why I said when the euro was at 118, if you really start to get a dollar rally, because, well, the dollar's rallying now. I said, the dollar's caught in a range. You take out that, so let's say it's 112.5, 111.5 in the euro, and all the other dollar, you want to look at the dollar index, you want to use that as your number. So if we go above 98 or 99, I think I think the global financial system gets in terrible trouble. Now, the Fed is aware of this, and I would say the Fed's aware of it because of what they did at the, not this last, it must have been, it was in their summer meeting, the Fed's meeting, when they instituted a standing repo facility, permanent.
I
Right?
do. Yes.
And and the numbers grow dramatically. And what that standing repo facility accomplishes is that if I'm a bank or if I'm a large institution and I own treasuries, but I need to raise cash, right? Because the walls are closing in on me and I need to raise cash, the Fed will take my treasuries, give me cash, whether it's for an overnight, a week, and it's available not only to large US banks and institutions, but large foreign institutions up to 60 billion apiece, by the way. So these numbers grow, and they're very aware of this. And why nobody ever asked them a question, are you concerned about a strengthening dollar? Because there's no magic to a strengthening dollar at these levels, right? I can give you, if I ask, and you guys ask me questions, I'm gonna ask you a question. What has been over the last 10 years, the range in the euro currency? Okay, it's a little more than 10 years. But if I ask you, what's the range since the onset of the great financial crisis? Let's go to 2009, okay? What is the range in the euro currency?
Does anybody have the answer? Because I don't. I'll look it up. I don't know.
Okay, so the high,
Go ahead.
using July, okay, I won't even use that high. So I'll go back, I'll go to December of 09, okay? The euro was at 151.5. In January of 17, when the Fed was beginning to taper, Yellen was leaving the scene and Powell was coming on board. The low in the euro was 103.80, let's say. Okay, so we've gone from 151.80 to 103.80, and we are presently at basically 116. So, and we've been in this range of 108 to 123 for quite a bit now. And so I'm not saying that anything is really happening, but if the Fed were to use the parlance of our time, if they were to be a first mover ahead of everybody else and nobody else went, like using Lagarde's stance, and we just saw Thursday what the Bank of England did, right?
Mm-hmm. Yes.
Last night, I believe that Bailey didn't move and raise rates because I think it would have put the euro sterling had already the sterling had already appreciated quite a bit against the euro. Now, since the decision of the Bank of England on Thursday, that cross had a 1.5% range with it rallying. So it's already recovered. So he didn't want to, I think that was a message that, hey, I'm not going alone here either. You know, I'm trying to rebuild the British economy in the Brexit world and everything else that's going on. I'm not taking this on by myself. Now the Aussies can, because their place is far less than the Bank of England, the Swiss National Bank by its own hands, but the Bank of Japan, the ECB, Bank of Canada, you see they're starting to move. But they've recovered all their jobs. They have recovered all their jobs. I'm amazed that nobody really comes looking for the Canadian dollar, by the way. This is just because the Canadian interest rates now are continually moving above the US rates. Energy prices are certainly strong, and their economy is holding together pretty well. So all these things going on. But Mark, stop me if I'm not getting to what you want.
No, you are 100%. And it's clear. It's just, it brings up another topic, which is interesting, around inflation and, where can the current administration really make a point? And they're talking about lowering energy prices, right? We're coming into the winter time in the US. And so many headlines are about home heating oil prices are at multi-year highs. Gas prices at the pump are at multi-year 7-year highs across a subset of over 10,000 gas stations, which we haven't seen in such a long time. But it's interesting, Biden and the administration wants to kind of tackle this part of higher energy costs and how that fits into inflation. Can talk about that another time, but it's just interesting to me that he's talking about lowering energy prices. And we understand about his stance on OPEC and what he said in Europe over the weekend. But if they release crude oil, so there could be an interesting headline this week and how the administration wants to tackle higher crude prices. And I'll quote what somebody had said, about releasing barrels from Strategic Petroleum Reserve, which would be a very temporary effect on prices. So it's going to be interesting to see what he does. He could circumvent the ban around taxes and what have you for drilling and incentivize drillers to do that. He could give a short-term pass for oil productions to pump, but that would give him a bad look. So he's backed into a corner. So, and I'll quote this. This might be Reuters. While such a decision would result in price setbacks, the SPR can only fill the gap during temporary production disruptions and not fix structural issues of underinvestment and rising demand, Sanavo said. The bank expects Brent crude to continue climbing over 90 a barrel in coming months. Oil prices recently touched 7-year highs, et cetera, et cetera. So, yeah, I mean, there's structural underinvestment, and we talk to folks who don't want to, lending to crude oil producers domestically is a big issue, and they're scared. These folks are scared to invest in these businesses and more crude oil production because of what happened, on day one, and the headlines around Keystone Pipeline being canceled. There's another crude oil pipeline in the Midwest, northern Wisconsin area that could get canceled as well. That goes under an Indian reservation. So he's talking at both sides of his mouth here. So it's going to be real interesting to see what his take is to lower energy prices, which, I'm just going to sit back and kind of wait to see what he does. But I don't think there's a real answer at all. And I think that's what's hurting American consumers the most. At least the headlines say, when you're paying $4.30 a gallon of gas at the pump.
Okay, so now there's a guy who I have this group where I live here in Scottsdale, and one of them is Hawaii, Kansas, and he's been very helpful. And he said 2 years ago, a year and a half ago, that Wall Street did not come up with a lot of money for fracking. They've been badly burned. As usual, they're chasing prices, and they got hurt pretty badly when the whole market. He said even before COVID said they were getting hurt, couldn't get any return on their money. So he said there's going to be a lack of investment. Number two, if Biden, for political expediency, and I stress that phrase again, political expediency, were to draw down some of this strategic stockpile. Now, what will happen, and I guarantee you this will happen, prices will get hit. They'll be back up immediately. And who's going to buy that oil? Of course, the large oil companies, and they will have a windfall gain. And the Biden administration will have to think about how that headline fits for them.
Agree.
No kidding.
Agree. Yeah. So
That is their worst nightmare. They're just coming from Glasgow. They're all singing this. They're all thinking, and now, and who can, Matt, you're not going to buy that oil.
No.
So they'll import less, you know, for that duration, you know, depending upon how they run the program. But, you know, oil is for the, well, it's not totally fungible because there's certainly, there's sweet, there are so many different grades, and the refining process determines much of what we get from certain things, right? You know, that was the problem with Venezuela. Venezuela oil is is probably the heaviest in the world, which is why Venezuela owned the big refinery, Citgo.
Yeah, Citgo, yeah.
Because they refine, I think it's, the Venezuelan oil company owned, I'm pretty sure it was Citgo.
It was Citgo, yeah.
And they would refine Venezuelan oil because it was heavy crude. And the expense and the way you do it is far different than when you, especially the oil they were getting from fracking, which was really highly desirable oil because it was such high quality. And therefore your refinery expenses are less. But that's what Venezuela was built on. So, you know, which really called to me the question when Venezuela was first importing what they weren't doing. So the world is not, they want the headline, but they have to be careful of the headline. And don't forget who also wanted to sell the petroleum reserve, the previous president, right?
Mm-hmm.
So imagine how that headline runs on Fox. They have to be very careful with this. Because again, for political expediency, it could really bite them.
Mark, I know right now that you've got some follow-up thoughts. I'm dying to hear them, actually.
well, it just gets back to my original point of how they're going to handle the elephant in the room, which is what they are viewing supply chain bottlenecks and out of control inflation. And I just think from what I see and read, I'm just looking at it as, you know, they'll jawbone all they want about higher energy prices, and maybe they'll you know, implement some short-term curbs that could, you know, impact prices lower. But the spending is out of control, and we've known that for a long time. But I think that this infrastructure bill and the spending that's going to go along with it trumps everything else, and that's what they really care about. And you know, they'll get that implemented because that has generational effect on the political, you know, the political groups that this positively impacts for years to come. And I just think that they're not going to be able to solve these issues until after the 2022 midterm elections. And at that point, you know, all this stuff will be passed.
Let me tell you this, on the infrastructure spending, if it really goes towards productive investment, bridge roads, ports, airport, you do get a return on it. And that's what any economist, so when they want to tell you, yes, most economists will say you will get a return. Now, Lacey Hunt may argue that the return for every dollar spent, it takes many more dollars in this environment to get the same impact. But at least you do get something tangible. Now, the next leg that Biden, or he was proclaiming he was going to be able to get, which is the social spending aspect of the infrastructure plan, which is now, which they were never going to separate, but they wound up separating. And some of the more vocal people on Biden's left fringe, of course, voted against it anyway, but they could do that comfortably because they knew that they had enough Republicans voting for it, right? So they get to posture. This is classic Washington. You know, I've watched people who are adamantly opposed to something, but because there's enough votes, they'll vote the other way because that's going to get them greater notoriety in their home districts. Oh, look at, you know, they stood, but they knew they could. Their vote wasn't really needed. And that was what took place here. So AOC and a few others could posture and vote against it, knowing that it was going to pass. That's classic cowardly Washington. And then they get, then they get their as Andy Warhol would say, their 15 minutes on that issue in the sun as they get, put out on CNN, MSNBC. We'll keep going. And, just like it would happen if they were on the right, they all do it. And I find it pathetic. You know what? If you think it's the right thing, vote for it and stop posturing. But they wanted the posture that they were opposed to it, because if you don't think AOC is positioning herself to run against Schumer in the Democratic primaries in New York, think again, because they all start to believe their own press agenda. But so you will get, Mark, you will get some, if the infrastructure projects are done well, and you will get real return on that. There's no question about that. I mean, again, we can point to, look at the, the Eisenhower administration, which the highways were built for defense purposes, but look at the outcome for the country. You want to, can you say you haven't recouped that 50 times over?
Oh God, more.
Yeah, okay, I'm being kind, so yes.
Agreed.
So you will get, you know what? A mistake was blocking the Keystone Pipeline again. You need that. You need that. But he played, and boy, he wishes he had it now. I'll tell you that. He might not say it openly, but it would help alleviate, even though a lot of that oil was going to go for export anyway. But again, you're maybe exporting it, but then you're keeping other oil in the domestic market rather than exporting it. And as you rightly talk about, if you think this is bad, wait till people see their heating bills this winter.
Yeah, there's a threat. I mean, the biggest threat we saw, a lot of folks run their heat off of propane. There's supply shortages globally. China is, building post-pandemic. They were bringing on a lot of PDH plants or single-use plastic production, and a lot of what they use to make those single-use plastics, they use propane to facilitate and basically crack and make these single-use plastics. So as China's manufacturing is ramping up, I mean, now you're starting to come into wintertime where there's really a threat where there could be a lack of fuel, propane and or natural gases to heat homes because of just the lack of supply in the marketplace. So the market really got worried and saw this coming about a few months ago or more, saying that, there's going to be domestically propane supply shortages. China and Europe keeping the arb wide open, saying we'll secure energy at any cost, which keeps that arb wide open, and exports continue to flow out. Unless the Biden administration comes in and says, you can't export, you have to keep it here. We'll see what happens there. If there's anything that comes along, I haven't heard any rumors about that, but there's actual supply shortage of energy to heat homes. So it's a real threat. And companies already are sending some notices around that there could be real supply chain disruptions for rail cars that hold propane that bring it in from Canada to the US. There just could be no heat. I mean, no gas, no product. You could run out if we get any type of sustained cold, and that will be deadly, to put it bluntly.
Geez, I didn't think of that.
Force majeure, if the product's not there, it's just not there. So the US has been, quote unquote, a little bit warmer since October. China's cold, Northern Hemisphere, China's cold, Europe's cold, and we're starting to run into some issues there, which could support crude prices as well. But it's really the gas is used for heating and heating oil as well, which, by the way, to get back to your point, Ira, propane has tripled in flat price, and heating oils doubled along with crude there since November of 2020.
Yeah, listen, that's right. And I have a friend who's a very market knowledgeable, one of the most knowledgeable people, and has retired. He's not retired, he's still working, but he lives in Woodstock, and he eats with propane. He is gone. I mean, if I don't get, at least we change emails all day long, but for sure there's going to be a complaint about propane prices and this has been going on for months and months and months. So absolutely. And that's just one facet of it. Natural gas prices, we know, have basically tripled. So, in the way that they're going to factor this, in the way that they play with this inflation, as I said, if I was asking a question at the Powell press conference, my question would have been, Chair Powell, the Social Security Administration just gave a cost of living increase of 5.9%. You're telling us that inflation has been averaging probably around 2.2%. Which one of you are wrong? I mean, because that's the obvious. If it's transitory, why is the Social Security Administration granting a 5.9% cost of living increase? Isn't that somewhat excessive?
Yeah.
Oh my gosh,
Look at your grocery bill. Like, what's the near? This isn't going away until they can get a handle on the. We had a brief discussion over the weekend of, what's the plan to alleviate the supply chain bottlenecks? Because if you were able to do that, you could get product moving again.
I wanted you to bring this up.
Well, I'm going to tell you. Because Powell told you in his question remarks. He said this. This was point number 6 following the worker participation. He said, depending on capitalism and its creativity to relieve pressure on supply bottlenecks. Now that's a quote that he believes that the market. Now I find that very interesting because the institution that has done more to destroy the forecasting mechanisms or the signaling mechanisms better of the money markets is now shouting about how it will be the creativity of capitalists that will resolve the issue of bottlenecks. I think very disingenuous on his part, by the way.
I was hoping you're going to bring this up, Mark. This is a conversation that we had over the weekend, and the comment that Mark brought up, or the idea that the thought that Mark brought up, the question of there not being propane, there not being the ability to get the propane to the consumer over the course of a cold winter, didn't occur to me until till now. And it's, I know it's a bit, it's a different direction, but than where we are now, but that scares me. Natural gas will be delivered, I'm going to get it, my home. Prices may double, triple, quadruple, but propane not being able to get to the people like your friend in Woodstock, who relies on it. You can store some of that, but you run out of it if you can't get it, then what?
There's very serious issues confronting us. Now,
Yes.
are they all due to, again, but they talk about food prices, and there's been no supply shortage or bottleneck in food prices. I'm sorry. Soybeans, wheat, corn, we've had record, well, not wheat. And we saw what happened with oats, right?
Yep.
Another tribute to
Yes.
my poor trading ability relative to the way I see markets. But these are very, very, well, the food issue really sticks in my craw because we've had record crops. We've had record crops. Why are prices elevated? And even with soybeans having sold off now 35% off their highs they made in May, up at 16, we're down at 1190 today, so somewhere there. So we've had a huge correction. So I'm not buying what everybody's selling here. And as far as capitalism finding a solution to the bottlenecks, well, yeah, we know that's what capitalism is good at. But these are things that I scratch my head about. And the energy market, so much of it is delivered by pipeline, right? Yes, I know the last mile is trucked or, but and we're not talking about global transportation. We're not talking about ports for the most part, because the United States is pretty good at now producing energy, even though we're importing. But there's only certain ports you can import oil to anyway, right? You have to have refineries there. Otherwise, it's not much use. So, and we haven't heard about bottlenecks, not about ships sitting off and not being able to unload, right? So, I don't know. I have a lot of questions as to really how these come to the fore. And again, then you have to go look at the strategic reserve, right? And that's why they're going to get in trouble if they play with it in an effort, because Biden's making such a big deal out of this. But I have another question. You're going to admonish the Saudis, the Russians. Meanwhile, while you put sanctions on everybody, does one hand talk to the other? They're so quick with the sanctions, and then they come hat in hand, and it is hat in hand. I don't want to go so far as to be on bended knee, but it is hat in hand. Hey, open up the spigots. Hey, while you're busy whacking them. So this administration needs to, and again, I'm not talking politics. I'm talking policy, just like I do with Trump. I cared not about to discuss the individual. But let's talk about the policy. And for the life of me, I have a lot of trouble following this policy because it's so disjointed.
Yeah, there's a lot of disjointedness. I guess I didn't understand. Circle back. There's a few things in my mind I want to kind of circle back to. One is, your mention of the last press conference, and Powell. Is this the first time that Powell has not used the through no fault of their own term?
No, he's kind of backed off, and I think. But I mean, reading Larry Summers, I think it was a Washington Post op-ed piece that he wrote maybe 2 weeks ago, but he let's see if I still have it.
I think this is incredibly important. I think that's I think that's very important, right? I mean,
Yeah, and listen, it's another economist with an opinion.
no, I mean the boogeyman. There's always a you know, we had the dot-com bubble. I don't like using the word retail trader because in my mind, you know, this is anecdotal, but you know, I don't like using the word retail trader because in my mind it denotes a guy with round wire glasses sitting behind a base computer trading day trading stocks in the 90s. But going back along that same line of thinking, going back to the dot-com days, you know, the dot-com bubble, the you know, the mortgage crisis. There's always something or somebody to blame for each crisis where the Fed has had to step in and intervene. You know, this no fault of their own. There is no, you know, no boogeyman, no boogie person. There is, to be politically correct, you know, so the Fed has had, because there's nobody to blame it on, there's nobody to demonize, the Fed has had to, you know, has had an unprecedented response to the COVID crisis. On top of unprecedented responses, beginning, you know, going back to my original point, I guess, about 08 and 09 with Santelli, you know, on top of an already unprecedented response that never really tapered back. And when they did truly start to taper, the double barrel approach in 18, you know, we had the Christmas volatility, which was great for me. It was the first big year that I had since I left the floor. Now with all of this liquidity still floating around in the markets, especially in the US, we've got all of these issues, and all of them disjointed. And I think that's, if there's going to be a you know, a boogeyman in the pile here, it's going to be the disjointed. Oh, I can't think of the word. The disjointed. You know, policies by the Fed, by this administration, by the current leadership, because going along the same lines with OPEC, you know, we keep throwing sanctions on folks and we expect cooperation in return. So again, the question is, how does this end? I have no clue. You know, nobody does. Does the liquidity bail us out? Does you know, does this massive infrastructure bill, does that continue to provide liquidity going back to the Australian method of, you know, spend our way out of this? Am I just completely all around or all over the board? Or do you see what I'm trying to say?
Yeah, no, and it's important. And again, we're back at the same crap, you know. And again, I don't care. Everybody wants to worship at the altar of the Fed. And
right.
There's very little to worship there. The people who worship there are Wall Street people whose lives have been made phenomenally easy by by loose money, right? Yeah, look at, if you were a passive investor this year and bought nothing but the SPY, you're up 25% for the year. In an economy that people are struggling with, right? So, and we're not talking about that it was up from a bottom. We're talking about it's up 25% from the previous year, which was
all-time high.
Well, hold on, let's be exact here. Which had been up. Oh, I gotta really work. And that was, you know, with the COVID, so we 32.30, which had closed
37.48, 32.30.
12% higher in 2020.
And that's after being down, you know, 20, 30%, whatever we were.
Which is coming on top of a market that had rallied, now going 2019. So, you know, that was coming off of that terrible last quarter, 18, but it was up, just for the record, about 27% in 2019. So you're not talking about a 25% rally off of, bottoming action.
No.
This is continuing. So, and see, I'm never enamored with the Fed. I go Ben Bernanke, who I can find plenty of fault with, and even Powell kind of tweaked him a little bit with that tapering comment to justify what he was doing. But remember back in 2007, because I remember it very well, Ben Bernanke said that the subprime crisis was contained. And it told me that he understood very well the theoretics of the market, but he didn't understand the practices of the market and had no concept of what the shadow banking system was doing or how it operated. Not that he couldn't comprehend it. So he made statements and he wasn't looking at it. It wasn't a priority for him. And boy, we know how wrong that forecast was, right?
Yes, we do.
As Powell rightfully admits, and I give him a lot of credit for that, ought to be very humble. Their words have humility, but their actions are arrogant because they keep proceeding at a pace that says, well, we know what we're doing. And, my well-worn response to it is, hey, you high-level mathematics, what the Fed does is not rocket science, because rocket science, in order to be effective, is exact. Monetary policy is anything but exact. But if you listen to the mainstream media and the electronic media, especially CNBC, Bloomberg, Fox Business News, you would think these people had a batting average of at least 900 rather than 90. And yet people hang, it's why I sit and analyze it. But I respect markets and the ability of, as Keynes famously said, markets can remain irrational far longer than you and I can remain solvent. I take that to heart. And the way I trade, it may be far different on a day-to-day basis than what I see going on. So when I read a piece like last night, that's a big picture view, but it explained to me, and all I was doing was offering it as a theory. I mean, I have no proof. I did a lot of reading and digging of things, but I've written about Brainerd being the logical choice since Biden has got elected. And I thought Powell should have resigned. Interestingly, like Jens Wiedmann resigned upon the election of the new German government. Now, he took what I consider to be the high road. He said, I've been here 10 years, I've been doing this. You might want to appoint, because he's the president of the Bundesbank as well as a board member of the ECB, but that's because he's president of the Bundesbank, then you might want to appoint somebody new who, maybe fits your desires better. I thought that was a phenomenally smart thing to do. I thought Powell should have done the same thing for Biden. Now, Biden may have reappointed Powell, but then Powell would have been much greater empowered because he would be serving under a president who chose him.
Oh.
And I blogged about that in real time because I'm not enamored with Powell. I had a direct question run-in with him before he was the Fed chair and got me disinvited to a dinner, but so be it. But it was, I want to ask questions that I think markets are really interested in. Not, in the media, you listen to these are jerk-offs. Really, they like to hear themselves talk and nothing.
Yeah, they are. You're right.
One question I could have given, if you didn't know the response, you have no business being there. A person who asked Powell about whether he had any thoughts about his reappointment. And I go, you really think that he's going to answer that question as I heard it? I said, and his first words were, I'm not going to speak to that. That's not my, really? So are you so smarmy that I'm going to trip him up and I'm going to get an answer? Right. A highly trained lawyer with experience, and and you're going to, but that's what they think.
They have college kids. They have kids that just finished journalism school. They have podcasts that are asking them questions now. I didn't even see Chris Politi this time. Maybe I just wasn't watching close enough.
Which is okay, but they waste. Why are you wasting time? Because someone else could ask a real question, but they're part of the anointed elite, and there's you see who gets to ask questions, who gets called on to ask questions. Okay, I got it.
Yeah, I want to see somebody like Alex there, somebody who knows what they're talking.
Yeah, believe me, she just wrote a piece on Sofer they were not happy with.
That's why I want to see her in there.
Well, that'd be too, but that ain't gonna happen. And believe me, they call and let them know.
No kidding.
Oh yeah, that's true.
No party line for her.
You know what? She figures, she is, and she is, her contact. You got to have contacts, everywhere. But they let it be known when they're unhappy with you, and I find that really reprehensible, especially if you're respectful. You're not like me to be flip and cynical, but if you're respectful, and Alex is definitely respectful in the way that you approach it and think it out. You know what? You got a problem. That's your problem.
She's the only reason I subscribe to Bloomberg. Maybe I ought to write a letter in and tell them that.
Well, I pay that too. So, and it's not for her, but I don't know where else to go, to tell you the truth. The Financial Times has become a joke. I read the South China Morning Post, and there's only 2 or 3 articles a day I could read in there. It's really, and the Journal, it's my wife's bailiwick. I've never been a Journal reader because they never covered the world deep enough for me. And now they probably do a much better job. But
how do you, the one last question that I think is completely off base, and I do think that this is off base, but I want to ask it anyway because it's in my mind. And something else. Okay.
Like Jermone Powell, I'll tell you if I don't want to answer.
All right. So it's, with the supply chain bottleneck, is what effect, if that worsens, or worsens by maybe even just being prolonged, and what effect will that have on the dollar? What is the black swan effect that it can have on the dollar, the outlier?
If inflation worsens?
Well, yes, if inflation worsens, the bottleneck, the supply chain bottleneck, inflation, all of it, the whole thing worsens. Will that be the impetus to push up the dollar?
Well, if it's a global concern of bottlenecks, right? Because now notice how all the banks use the same language, right? They're all dealing with bottlenecks. That's why I found Lagarde's comment about, it's odious to compare. What do you mean? You all use the same language. It's like you just recycle this, you cheat off each other's paper. That's the way I put it. When I sat on the Merck board for this 7 years in total, one of the things that irritated me as a board member, but it irritates me in many other facets of my life too, are people who leave a meeting and talk about things that ought not to be talked about, which we in the popular parlance call leaking. I can't stand listen, if you don't think I had multitudes of people calling me about CME, I said, no, wrong guy. I said, you'll have to kill me. I said, I know. That would finally, there was nothing coming for me, but I would hear leaks, okay? And I'd get calls by the time I got home, or I was in my car driving home and I'd get a phone call. Hey, I go, what? And it was appalling, by the way, really appalling. And then I started using certain words, like if I was in a strategic planning meeting or something, and I go, in a conversation with somebody, I would use certain words. And if those were the words that came back to me, I knew who was leaking. And that's like the central banks, they got to figure out all the leaks in their, well, now we know Rosengren and, and others, of course, and in Europe, it's worse because in Europe, they've been stealing for so long. And I mean this via stock markets and, inside information. And it's been going on for so long, and it's going on with the ECB. I can tell you Reuters is the source, is the leaker's preferred outlet. You can tell, but so language becomes important. So when we talk about bottlenecks, you know what, man, I don't know. But if it's a global phenomenon, which according to their language, it appears, I don't know, but will it affect the dollar? I don't think so. But if the dollar were to rally, they've got a real problem. And I think Yellen definitely understands that. And as Secretary of the Treasury, that becomes interesting because that's her bailiwick, right? The dollar is not the concern of the Fed, although everything the Fed does affects the dollar.
All right, I guess what are some things that we should be on the lookout for on a day-to-day basis that would cause some explosive dollar strength that would then I'm guessing at that point we're going to see yield curve control as well.
Well, yield curve, well, I don't know. Tell me, because Powell seems to have walked away from it up until, as I talked about, Jacksonville 2020, when Brainerd gave 3 speeches on yield curve control prior to that, probably up until July 2020, and then it disappears from the language, right?
Mm-hmm.
They have not heard crap about it. Now,
right.
I really believe that the ECB practices yield curve control anyway, in the way that they intervene in their markets. Because don't forget, they have to buy there's proportionality, because the European Union law demands it. And the whole concept of the capital key, and they set that as to how the ECB would of course do their QE. So if Germany was 25% of the capital key, 25% of the debt instruments that the ECB would buy would be German. It has to, at the end of the day, Draghi let everybody know that don't look at that on a day-to-day basis. It's not an issue of flows, it's an issue of stocks. The stock meaning what you have in your inventory that will balance it out, but it need not take place on any given day. He was adamant about keeping the market abreast of that. So I can't tell you what the key is. Stay tuned. And if you have a question, you go, but what would, I'll tell you what, I think if you got what Biden's selling, if you got a $1,750,000 social infrastructure package, I think the dollar would come under pressure. That'd be way too much.
Okay.
Way too much. I think the infrastructure pack, if this is all you get, it's, investors wouldn't balk at it. But why do you think the bonds rallied so significantly on Friday? And that was quite a rally.
Yes, it was.
Even with good data. So I don't know, I go, what is going on here? And that was coming, 2 days after the commencement tapering. Now that they had already signaled that they were, that didn't surprise anybody as you saw the market action on that Wednesday, right?
Mm-hmm. No, yeah.
Didn't surprise anybody. So, I mean, that's where it lies. I think there's a lot of things in motion here that we have to be very careful about. Now, we can talk about, and it's not for today, but precious metals versus crypto. That's a very long discussion. So we can.
It is, yeah. It seems like Temple has gotten a little crabbier in his last few comments.
His mom just passed away, by the way.
So, well, I'll say a prayer for him.
Like his, you know, he's somebody I only really met through the blog. We have a lot of cross currents in our lives, but I never. So when he was in Chicago, he doesn't live in Chicago, but he came to visit his parents, and we had breakfast on more than a room. And since then, I've been, you know, I talked to him quite a bit. So that was, yeah, but I think even before his mom actually, you know, has some issues, but that doesn't, he's a very bright guy and a very good thinker. He has just been worn out. I think the metals moved back in January when we saw silver basically touch $30, January and July and February. And then he said, and he just sees it so manipulated. And I'm not going to disagree with him, but I wrote a about who's manipulating it. And there's some massive funds out there, sovereign wealth funds, I think insurance companies and pension who are playing in this arena and moving markets around for no other reason than to try to generate some, you know, some extra return. And they're massive because you see moves that come from nowhere. And with all this money, why wouldn't you? I think the Chinese and the Russians are in playing in a very big way, which is, again, you know, these guys who I advise, who I gave my name to, Praxis, because I like them a lot. And they've been, hold on, I have to answer it. So, I lost my train of thought for a minute.
Praxis.
Oh, yeah. So now they're a global macro, discretionary global macro. And I've invested with them, and they've really grown the firm beautifully. But the last 3 months, which have not been easy for global macro traders, by the way, because as you can see, have been, but because they're a, what's the word I want? They're a tribute. That's what they are, a tribute to being patient. They made 1% in August, 0.7% in September, and 1.5% in October. And I said, I can't believe it. That's really great. That's great performance. And they said, it's because we're patient. We're not trying to trade and overtrade. And I think that's the lesson that we all need to learn.
Oh, yeah.
From understanding the impact of algorithms, right?
Yeah.
Friday was a classic case for me. I traded other things shitty, but I traded the metals well because I put in orders prior to the unemployment number. And I can tell you this, based on the work. And so I had buys at 1785.80 in the gold, filled, and I had orders at 1771.5. I'm sorry, at 2371.5 in the silver, and I got filled. Now I didn't ride them for the whole day, but it was levels. I like getting filled at levels like that, not because they're at the lows, because it tells me that the work is correct.
Yeah, no, I know that, and that's how I trade gold too. I bought some more at 1777 and paid for. Still have a few.
It tells me that the work is correct, that all this effort is correct, and you know the view will play out. I know that, and if I would let things run a little more. In fact, I was reading somebody put out a piece from Druckenmiller and Soros talking about it, and you know that Soros always makes the most money when his back hurts the most. Because his back hurts because he's internalizing the fears of the risk. That's what Druckenmiller said about him. When he heard from Soros, when his back hurt, he knew it was a good trade.
That's really good.
So, you know what? As again, you know, my middle class sensibilities and earning a great living over these years and working hard. And I was at a dinner on Friday night, and I was talking to people who really, somebody I just met, and they go, well, why do you work? I said, they said, you're still working? I said, most days between 11 and 14 hours a day with my reading, because I count sitting and reading and analyzing so many articles and data that's part of my workload. In fact, I try to sit less at the screen. I'm gonna go take a run because I'm getting ready for the turkey trot where I live. So
Wonderful. I mean, really, I'm glad we recorded it. It was a really good conversation, at least for me. There's so much going on, and just so much going on. So thank you, Ira, for the time again.